Good morning, Jags. This is Fahad. Today is Tuesday, December 1st. Let's get started. The chart that's in front of you is Apple. I did some digging last night to collect some more research and wanted to bring it today, given the technical picture and aggressive amount of call option activity that we saw yesterday in Apple. So let's dive into a bunch of pictures there. Number one, here is a note, a small little paragraph from Credit Suisse note that came out, and they point out that since last Monday, the wait times in the United States for the iPhone 12 Pro have extended from 2 to 3 weeks to 4 weeks, and they believe the uptick in 12 Pro waits could be due to holiday demand, particularly around Black Friday and Cyber Monday, although this could also be related to some supply constraints. They also say that the strength is in Pro and Pro Max is likely a positive for ASPs. This note came out today in pre-market from Credit Suisse. Here is a very interesting chart, and in this one, what they did was they compared the wait times for iPhone 12 Pro SKU compared to the iPhone 11 Pro, which came out last year. And you can see that by the time initially whenever the launch happens, which is right over here, you see wait times actually generally above more than 1 week. But then by the time 28, 29 days or 30 days come around, we usually start to see this thing taper off, but not happening with the iPhone 12 Pro. You can see last year when the iPhone 11 Pro came out, by day 28, the wait times had started to come down for under 1 week. This time they're still staying strong, and we're at day 35 now. Further moving along, if you go by geographically, and if you look at where the extended times are being noticed, you will see it's mostly in the United States, China, and Hong Kong, but it's really globally everywhere. The most red parts in this charts are clearly the United States. Whether you look at iPhone Pro graphite version or silver or gold or blue Pacific blue version, or you look at any size of these iPhones, they're all 4 weeks. Hong Kong and China is 3 to 5 weeks. Japan, UK, Germany, and everybody else are yellow, basically between 2 to 3 weeks. Considering there's still 3, 4, 5 weeks, generally speaking, globally. And last year, when iPhone 11 Pro came out, we saw only after 28 days, the amount of wait time had already decreased by less than 1 week. It seems to me that now we're at day 35 and we still have 3 to 4 or 5 weeks globally, that this cycle is definitely far, far stronger for iPhone Pro 12 versus the iPhone 11 last year. Now, keep in mind that for quite some time, in fact, going all the way back to 2016 and 2017, we have been hearing about super cycle, iPhone super cycle. And the reason for that has been a significantly rising install base across the country. In fact, it is now estimated that the global iPhone install base is somewhere between 1.2 and 1.5 billion. And I'll show the chart of that shortly as well. It seems to me that that super cycle didn't happen in the last couple of years, but this year with the iPhone 12 Pro, it's far, far stronger, maybe could be the beginning of the super cycle than what we have seen in the past. Further moving along, here is the difference between the iPhone 12 and the iPhone 12 Pro. Remember, it's the iPhone 12 Pro, the larger version, which has higher average selling prices and as a result, higher margins for Apple, is the one that is seeing longer lead times, not the iPhone 12. Further moving along, here is the technical chart that I showed in the chat room yesterday. And I mentioned that Apple has the same kind of tightening wedge and a technical setup that Tesla had very recently before it broke out sharply. And for my technical views, if this starts to break out through 120, 121 today, firmly on rising volume for second consecutive day, similar to the kind of volume that we saw yesterday, the first target on this stock is about $127.50. But if it runs with this tight wedge breakout like Tesla did, this could be actually rising all the way back to new 52-week high, maybe all the way to 140 plus. We also saw yesterday one of the most aggressive days in the option market that I've seen in Apple, with ridiculous amount of call buying. Nearly 2 million call options, 2 million contracts of call options traded in Apple yesterday, about 1.7 times daily average call volume. and the total amount of call premium bought was 48 million. This is way off the chart than I've seen in Apple in a long period of time. Here is that install base that I was talking about. Look closely. This is the global install base in Apple, rising gradually from 2009. 90 million install base, and then steadily increasing and increasing due to some slowdown in the global economy because of tariffs and other things since 2017. We saw this graph slightly started to taper off, but make no mistake, this chart is as of 2019, and based on the last comments that came from from Tim Cook, in the last earnings reports, he talked about that the installed base is now actually above 1.2 billion globally. So this chart has actually been extended further. That's where the question comes in. What kind of refresh cycle refresh are we going to see if the wait times is this long and the installed base has grown to 1.2 billion globally? And then further going along, here is another part, sticking with the idea of how the install base continues to grow. Americans are hanging onto their phones longer too. We have talked about this multiple times in the past. Go back to 2016, and the average holding period of an iPhone was about 2.4 years, and now it's 2.8 years, and potentially, because this is as of 2018 data, it's potentially even longer now, more than 3 years. And then lastly, here is connecting the dots, all of this. I would like to point out that if this is bullish for Apple with a technical breakout, then it's certainly bullish for Cirrus Logic as well. Cirrus Logic as a component supplier is one of the biggest component suppliers to Apple. It gets about 86% of its total revenues just from Apple because it provides the circuitry that goes inside these iPhones. Yesterday, this stock is trading. This is the weekly chart that's in front of you. You can see in just the last couple of weeks, it started to break out, closed at $80 per share yesterday. But yesterday, I saw a small pickup in call option activity in June 2021, 100 strike calls, with the stock currently trading at $80. So if Apple is rising, it's certainly bullish for Cirrus Logic, and I'm sure it's also bullish for Skyworks Solution. It's also bullish for Qorvo, symbol QRVO, and a bunch of other names that are component suppliers to Apple. But Cirrus Logic gets the biggest piece of its revenues by about 86%. It's somewhere between 82 to 86% that comes just from Apple. So here's the technical look, another technical look on Cirrus Logic as well. Had a big high volume breakout through this bull flags through $78 per share yesterday, and it closed slightly above $80 per share. So look for this to continue to march higher steadily all the way to $100 per share, possibly by summer of 2021. And that's it from me. Jay?
Morning, Pod. So today, just want to give a quick update on Corsair Gaming. Ticker CRSR. Name we've talked about numerous times before. So yesterday there was a press release that we didn't get to cover, and that was that the company for the full year 2020 said they now expect net revenue growth of approximately 50% to 52%. And adjusted operating income growth of approximately 183% to 192%. These numbers will exceed the expectations it provided back on November 10th. And this is from what it looks like, one of the reasons why Barclays raised their price target this morning, which we covered in first read. Now, management attributed this uptick to a combination of both improving supply and consistent demand. And then yesterday, they actually happened to be presenting at the Credit Suisse Technology Conference, where management continued to highlight outsized growth in streaming gear and products sold by their Elgato brand, which is not only helping the revenue trajectory, but also pushing up margins over time. They noted demand is primarily from existing gamers looking to stream, though they also noted some incremental crossover into other categories of content creators, such as in cooking and fitness. Now for their Scuff brand, Year-to-date performance has been better than expected, with a further pickup coming next year, as there is typically a lag between the launch of new consoles and then when these peripherals start to get purchased more broadly. And then the final point from the conference was that the company detailed its recent acquisition of Gamer Sensei, which is a coaching platform for gamers, in addition to its partnership with a company called Pipeline, which offers education to streamers. In particular, Corsair sees the biggest training opportunity in streaming, as the average streamer is less tech-oriented than the average gamer, with non-gaming streamers recently becoming a significant part of the market, which goes back to the sort of that cooking and fitness content creation. You're seeing a different type of content creator other than just pure gaming. So that's all I got for today.
Excellent stuff. Very nice update on what's happening behind the doors over here. This has been on my watch list to buy. I was writing call options into this one, and then I closed them a little bit too early, right around here at $39 per share, and then the stock just went parabolic, rising all the way to 51. So I missed that last two powerful legs, but then I was happy to come see it basically pull back a little bit. Big hammer reversal candle yesterday, and should open flat today to see. Let's see if this is starting to form a rounding bottom over here after a modest pullback, because I still believe this is an incredible growth story that is not fully recognized on the street. And I think they priced the IPO way too low. It's still, even after this run since the IPO, I still believe that compared to peers, this is still too low. So these kind of updates certainly help improve the sentiment. So let's see how the stock reacts today. Good stuff. Chronicle.
Good morning. Have a couple of items. First off, depending on how the stock behaves today, I may look to exit my GameStop long position, or at the very least take partial profits. I made the long recommendation on November 12th, and this short squeeze thesis has worked out very nicely. Like if you noticed on Friday, which was a very light volume day for the market, stock shot up about 9% on pretty average volume. There's this misconception that stocks can only be volatile when there's high volume. On the contrary, it's actually pretty common for small caps with bloated short interest to push higher on low volume, because there are simply not enough sellers to absorb all the short covering and buying. And so sell orders are just getting taken out quickly on the way up. And then yesterday we saw a massive spike because after Friday's low volume breakout, now the short sellers are being systematically forced to cover. So this has been a nice trade. I think at one point yesterday, the stock was up like 60% since the call was made. But now looking at my annotated monthly chart, the stock is somewhat getting rejected at a multi-year key resistance level of $17. So although I do believe the short squeeze thesis will probably continue to play out, I think the stock is going to stall for a bit here because normally they don't break out through key resistances at the first attempt. So on balance of probability, I think now might be a good time to, at the very least, take partial profits and then rotate the money somewhere else while the stock presumably consolidates. So that's my first item.
Yeah, this is a fantastic trade by you, Chronicle. And I know there's certain clients after that conversation that we had. This was on November 12th, right here. This is where Chronicle provided the contrarian bull case for GME, with game consoles launching that could give a bump to the stock, especially with high short interest, and also a partnership that's in place with Microsoft. Now, this conversation happened on November 12th with the stock at $13 per share. It was right here, and it was starting to bounce off a trend support, and then just went berserk completely, rising by more than 50% in just a matter of 2 weeks. So it's a great call and a great entry, and now exiting the position. Good stuff.
So my second item this morning is a review of SMC Corp earnings for the 6 months ended September, which is their fiscal H1. Symbol for the stock is SMCAY, and this was one of our picks from the Q4 quarterly outlook on page 106. And it's up nicely for anyone who's bought the outlook. But in case you're not familiar, this company provides retrofit automation and pneumatic solutions for factories across mostly Asia, but also in Europe and North America. And the bull case, which we provided in the outlook, was twofold. Firstly, the pandemic has been forcing a lot of manufacturing facilities to modernize and automate um, their assembly lines in order to minimize contact and maximize social distancing between all the workers. But at the same time, because of the recession, a lot of companies are just not willing to invest that much to completely overhaul their assembly lines. And so this is where SMC's retrofit automation solutions come into the picture, because these solutions are a much cheaper alternative. So this company has been quietly a beneficiary of COVID-19. And then the second part of the bull case, which I shared during our conference call discussion, was that with the US and China trying to isolate from one another and the Trump administration's supply chain restrictions, my prediction was that China's factories are going to start turning towards Japanese and South Korean suppliers. And so Japanese semiconductor and machinery companies like SMC or FANUC, which I currently own, Tokyo Electron, Minebea Mitsumi, all of these companies are going to be beneficiaries of Buy China, Build China, and geopolitical decoupling. But now coming back to SMC's earnings, I have to say the numbers were pretty good. Despite the global recession, the company managed to grow net sales by 5% year over year. And more impressively, their operating profit grew 11%, which was 41% above their previous guidance. And they also increased their CapEx by 46%. In terms of looking ahead, if we look at this chart that shows orders from various industries that SMC is receiving, we can see that every industry that the company caters to is now above the 100 level, which is indexed to 2019. So essentially, SMC is now receiving orders at above pre-pandemic levels. And then lastly, just want to point out, there was some management commentary in the supplementary notes, which pointed to how geopolitical conflict and the rise of protectionism in US and China has resulted in a shift in the behavior of how their end markets are sourcing their supplies. So reading between the lines, they are basically saying what I predicted, which is that a lot of Chinese factories are starting to turn towards Japan for their machinery and automation needs. And so as a result, SMC is now looking to allocate more CapEx towards establishing new production in production facilities and bases in both China and Vietnam, which should contribute to further growth within Asia down the road. This is a Japanese company, so even if the White House continues down the road of blacklisting Chinese companies, it's not as if they have a say in what SMC does, because this is not an American company. So in fact, the more the US and China attempt to decouple from each other, the more Japan will actually benefit.
Two things that I will add to this fantastic bull case. First of all, everybody who doesn't have the fourth quarter outlook for 2020 from the Jaguar fourth quarter outlook, here is the bull case. Now you know, here is the bull case that was presented on page 106 with the title Monopoly in Pneumatic from Asia, with a recommendation to buy SMCAY common stock for $27.20, and right now it's trading at $31.80, so it's up about 12-13% since that recommendation, and recently started to break out on high volume. Now, two things that I will just add to this, that on the part about protectionism, global protectionism perpetrated by United Kingdom and United States, essentially with the leadership positions here between Boris Johnson and Donald Trump, is the same exact dynamics that we're also seeing in the semi sector. Remember, one of my key reasons why I'm so bullish on a semi stock called ACMR, right? I mean, we own this stock and many JAG clients own this one, ACMR, in the semi spaces for exactly the same reason, that China is starting to develop its own domestic manufacturing of semiconductors, so it doesn't have to depend so much on international dynamics, and they're still many years behind, and as a result they're starting to source more and more domestically for all the components, as well as from regions around them instead of depending on the United States, to basically get around all this friction that has been created from this protectionism. This is the same exact dynamic that's playing out in the industrial sector as well, and it's benefiting a name like SMCAY. So that's the first thought. And secondly, when I saw today's first read that went out, and I mentioned this before too, and when I see under the economic calendar, and I see this, South Korea manufacturing PMI beat, Japan manufacturing PMI beat, China Caixin manufacturing PMI beat, and across the board, Switzerland PMI beat, and France manufacturing PMI. I mean, how many times the Australian manufacturing PMI, same exact thing. How many times I've talked about the same exact thing, that manufacturing is coming back with a vengeance, strong outperformance across the board. And that's why it brings me back to all of these ideas, such as, Buy America, Build America theme, and the value names such as industrial, transportation, infrastructure, construction, mining, oil, all of that stuff. So when I see, first read covers the summary like this, and naturally my first inclination is that you're going to have another strong day for all the same basic building blocks of the stocks of the economy. SMCAY is clearly a play in that, but I will just add to this discussion that a name like Caterpillar should pop today in the stock market because of these strong PMIs. Similarly, Honeywell, similarly, a whole bunch of industrials, and a lot of these names that we have been talking about should pop strongly along with Russell 2000 index, generally speaking. So just wanted to connect the dots with those two items. Otherwise, fantastic trade, and I don't think we're going to give up on this one yet, because I believe this thing is still heading higher. The trend is strong and continues to break out. So I expect more upside gradually in SMCAY. All right, folks, we're going to stop over here. Thank you very much for joining, and we'll see you in the chat room shortly.